All right, now, the Kenya Mortgage Refinance Company, KMRC, is a financial institution, actually, that was established in 2018 under the Companies Act of 2015. And actually, it's very critical when you talk about funding, housing, and development in this country. Right now, I'm joined by Flora Mthaura, who's the head of risk and compliance at KMRC. Thank you very much for making time, Flora.
Thank you, Noah.
Your title looks very heavy, risk and compliance, but for starters, maybe just to set foundations, if somebody has not heard of Kenya Mortgage Refinance Company, what do you guys do?
Thank you, Noah, for making time to invite us to be able to clarify what KMRC is. So KMRC is a financial it's a financial institution that was established to increase the rate of home ownership in Kenya through provision of long-term finance to mortgage lenders. So as you've said, we are regulated by the Central Bank of Kenya as a non-deposit taking financial institution, mainly for extending long-term funding to primary mortgage lenders. Mm-hmm. We received our license and we commenced operations in September 2020.
Okay.
So generally, when you look at the mortgage market, it's been largely underpenetrated relative to the potential demand for home ownership. Mm-hmm. Most people are looking to own homes today. So, and when you look at the existing mortgages in the market, they were mostly for the high end and upper middle income segment of the market, neglecting the lower middle and the lower end segment of the market. So the entry of KMRC into the market is mainly to capture this untapped segment, and that's why we are offering a product that is fixed and long term, in order to make it affordable for the local mwananchi to own a home.
Okay.
Yeah.
So, just to keep it as simple, essentially you are the people who are lending financial institutions who are supposed now to advance loans to Kenyans.
Yes, yes.
But when you give them money, you tell them this money, we want our money to go towards this particular group of people with this particular set of earning for this particular product. And I know there's been a lot of talk about affordable housing in the country. Now the government promises 500,000 per year, 500,000 units. Now when we sought clarification of that, we were told we are creating an environment, we are not necessarily building 500,000 units. And this seems to be part of that facilitation, the issue of financing. How big of a gap is it when it comes to financing affordable housing, and what might be some of the barriers to entry for that market, which is majority of Kenyans?
Yeah, as you've said it, actually, there's a big gap. As per the last statistics that were done, there's a housing deficit of 2 million units as at 2019, and that deficit has been increasing year on year by 250. Affordable housing finance has also been a challenge, because when you look at the kind of financing that banks were providing, they were mobilizing deposits from borrowers, account holders, and planning their cash flows in such a way that they can extend that to a borrower for mortgage. So you'd find that due to the short-term nature of the funding that they have, they could not extend a mortgage for 25 years. As a result of that, access to mortgages was quite a challenge, and it was expensive for the ordinary Kenyan to access a mortgage. So the entry of KMRC into the market brings access to long-term funding at 25 years. Now, when you stretch it for a long-term period, it makes access easy. And then we've capped that amount to 8 million and also the income limit to 150. And the reason for that is people who are earning above that could easily afford a mortgage. But people who are earning below that could not afford because of the tenor, the short-term nature of the deposits that banks were using to provide mortgages. Okay. So the entry of KMRC provides an opportunity to Kenyans to be able to walk into a bank today and ask for a KMRC-backed loan, because you get to pay 9,000 for a 1 million house. you get to pay 18,000 for a 2 million house. That is an amount that you could not previously use to pay for a house.
Definitely. Yeah. We're going to take for you to mention some of these places that Kenyans can actually walk in and say, actually, this is what I am, and I like MRC-backed financing. But looking at the nature of this country, when you talk about mortgage uptake, it's not been the highest up there, as you say. There's always been sort of a schism between, high end and the majority of Kenyans when it comes to seeking financing for owning a house. So I don't think it's something that is top of mind for majority of Kenyans that can actually get financing to own a house. And this speaks about the way we process mortgage and financing a home as a whole. Because I see in different jurisdictions, you look primary conversations that we have as a people. How can you be able to turn that around, and is KMRC also doing something in that regard?
Yes, there are a number of reforms that KMRC is driving through the policy proposals that they are driving through the government. Of course, a mortgage, you'd not easily access it as easy as a loan because of the procedures that you'd have to go through. But for example, we've allowed financial institutions to allow customers to access financing directly by extending the loan to value up to 105%. So as opposed to previously where you'd walk into a bank and they'd tell you, please give us 10% deposit for a 6 million house. You see, now you have to go back and start looking for 10% of 6 million is 600,000, right? That's not affordable to an ordinary Kenyan. So KMRC has allowed financial institutions to lend to a customer up to 105%. So today you walk into a primary mortgage lender, you tell them that I want to access a KMRC-backed loan. So they do have their own requirements. You need to have an account, or if it's a SACCO. So for the primary mortgage lenders, we have banks and SACCOs, and there are different requirements that you need to fulfill in order to be able to qualify. So if it's for a bank, for example, they'll tell you need to have an account, and then they look at your income. Is it 150,000 and below? And then you'll fill an account opening form. And from there, they're able to conduct their due diligence. Now there's the normal valuation process that goes into property financing, and there's also the legal process, which costs you money, the 600,000 that you are talking about. So for a financial institution today, they will give you money to cater for those charges. So it makes access easy, and that's how KMRC is actually penetrating the market.
And on the flip side, somebody might generally ask the question, okay, you are advancing money to finance my affordable housing endeavors and dreams. Where are you getting your money from then? So we have different sources of fund. We are financed by both the government and the private sector. And this one goes back to our ownership structure. So we are owned by both the government and the private sector. And our shareholding structure has a mix of shareholders. We have the government through the National Treasury at 25%. We have commercial banks at 44%. We have SACCOs that have a cumulative 8%. And then we have development finance institutions. Then we have where we get our lines of credit, the World Bank and the African Development Bank. But this is a sovereign debt. So we get it through the National Treasury, and it's very concessional. And that's the funding that we use to advance to primary mortgage lenders for mortgage lending. But now, aside from that, we have the shareholder contributions from the shareholders that I've just mentioned. And then we have the second tier of debt, which is the corporate bond. So we do also access funding from the capital markets, and this is mainly to enlarge the scope of funding that we have. I know you might probably ask, why go to the capital markets and we are financing affordable housing? So this is mainly one of the sustainability initiatives for the company, because at some point the concessional funds might run out. However, we are also wary of the market conditions.
And that's why we raised our first corporate bond last year in February. The company was able to access up to 1.4 billion, and we used the blended form of financing to reduce the cost of capital so that we can still lend these funds affordably to primary institutions.
Okay.
Yeah, so our sources of funding is sovereign debt from the National Treasury through World Bank and African Development Bank.
Definitely. And I'm glad the source is sort of very diversified, especially in the environment that we are in, as you rightly put it, kind of unstable here and there. But this year has ended. As we finish this interview, I know 2024 is coming up very strongly. And individually we were asked to write down your goals, and a lot of people by February 14th, when they're celebrating Valentine's, they're forgetting about all the goals. But for KMRC 2024, what does the year look like? Anything new that we are expecting for 2024 from KMRC?
Yeah, most definitely. We'd like as many Kenyans as possible to be able to access the KMRC financing. So one of our key goals is to make this funding visible to most Kenyans so that they know it's available for them to access. You can imagine as early as last week, the CBR rate went from 10.5 to 12.5. And what does that mean? The mortgage rates also go up. The lending rates go up. And we saw one of the banks actually posting their base lending rate at 17% with a margin of 8. You can imagine now getting a loan at 26%. So the advantage that Kenyans have today is that you have affordable finance that you can easily tap into and buy a home. But another initiatives that KMRC is driving is to implement a risk-sharing facility. So one of the challenges that we've noted from the banks is that they shy away from lending to the informal sector, and for obvious reasons that they consider the informal sector to be high risk. And I think it also suffers from undocumented income. For a primary mortgage lender to lend to today, they want your pay slip. But what about that Kenyan working in the informal sector? Probably they don't have documented income. So the risk-sharing facility is mainly to give protection to the primary mortgage lender so that they can enlarge their scope of financing to the informal sector. They can also lend to the SME. Yeah, so and the RSF mainly protects the primary mortgage lender by assuring them that in case of default, KMRC will cover part of your default. Of course, there are the normal foreclosure processes that take place, but now that risk-sharing facility will give a mortgage guarantee to the primary mortgage lender. So that opens up an opportunity for the SME sector to also access the KMRC funding to buy a home.
And I know majority of them are watching right now. They will be ready to take advantage of that. But thank you very much, Flora, for making it known, and this is the gospel that we continue to spread, to make sure that as much as rates, people are recalibrating their rates. So when it comes to mortgages and financing, it's actually critical for you to look for sources where you can get it at an affordable rate, especially for affordable housing, and KMRC is one of those lines. So thank you very much for taking time to speak to us. Flora Mthara is the head of risk and compliance at KMRC, and she tells us that even as loans become riskier, KMRC is trying to cover you. Take advantage of that. Let's take a short break.